Good evening to everyone, and welcome to our second session for the semester. So I think the admin first, what I would like us to do, I have posted or I have pasted links. The first one is in respect of the attendance register. You will see it appears on the meeting chat. So you will need to please complete the attendance register for me. And the second one is the feedback form that I would also like you to please complete either during the session or towards the end of the session. I've placed the link also to the, I'll place the link to the feedback form on the meeting chat chat box as well, right? Okay. So just a couple of things that perhaps you can take note of is to ensure that your mic is on mute. Also ensure that your camera is switched off. If you want to ask questions during the course of the session, you can raise your hand or you can type them in the meeting chat box, and I'll try and monitor the chat box as the time goes by, right? So I think the persons or the people that just that joined just now, you are unfortunately not going to be able to follow the conversation on the meeting chat. So what I'll redo again is I will post the attendance register that you need to complete for me, please, and then as well as I'll also post the link that you need to complete for me. That link will relate to the feedback form, so you can complete the feedback form during the session or perhaps towards the end of the session. Okay. So I'll just repost I'll repost the link for the attendance register. It's coming in. So that will be the attendance register. And then your second link is going to be the link that relates to the feedback form. And then that one you can complete for me during or towards the end of the session. Okay, so the link is coming just now. Okay, I just hope everyone can hear me. If you can hear me, you just type yes in the chat box. If I'm not loud enough, then you can say so in the chat box. Okay, fine. Okay, great stuff. So everyone can hear me. Fine. Now, so last week, what we did, last week was a question one we've done, right? We've done a full question one that was based on tablet 102, right? So the aim of these questions is to actually get you ready So obviously there's also some other things or practicing or exercise that you do on your side, right? So and there's also an idea or the reason why they are as short as possible, so that we're able to accommodate it in the amount space of time that we can present them. So today we're going to do it's question 4. Question 4 comes from the same tablet or tablet 102. So we'll basically, so you will see from question 1 to question 2, there's now different principles that have been introduced that we're going to work through all together, right? So I will try and do the question with you rather than now trying to show you what the solution is because I think all of you are able to read what the solution is saying, but I think it then becomes easier and you can remember it easily, principles, when someone does that with you, So what I will do, we'll read the question, and after reading the question, we'll ask and answer certain questions. So it's important that you also participate in between, so that at least you know what it is that you know and what it is that you don't know, right? So in between, if I ask you, but it will very be specific things to the point that I'm going to ask you, or general entry, or what amount it is, and all those kind of things, right? Okay. So I think let's start. So what I will be doing, right? So now I will just share the question with you. I'll share my screen with the question with you. But the moment I start doing the question, I'm only going to share the Excel version that I'll be using to complete the solution. So then you will need to read in your own material. So for now, as we analyze the questions, because there's a specific purpose why I want to share the question with you just now. Okay, so I'm gonna put that up quickly for us. Which one is screen 2 now? Which one is screen 1? Okay. Just want to see. Okay, it's not this one. Where is the? Okay, just want to see. Undo that. Okay, should be this one. Okay. Share my screen. Okay, there is my screen. I think all of you can see. Okay, so basically, if you can't see, but you should be able to see, it's question 4 on tab letter 102. Right? Okay, let's go. Fine. Now, this is the question that you are sitting in an exam, you receive this question, and the idea when you read this question the first time is actually to read and ascertain as to what it is that's going on. So we'll read together because you're planning for a question, for any question, if it's of paramount importance. So if your planning is bad, chances are you're going to do bad in the question. If your planning is good, then chances are you'll do good in the questions, okay? So the following represents a trial balance, right, of Aroma Limited for the year ended 31st of December 2018. You already know which year you're dealing with now, okay? So they give you a trial balance, sorry, and then you have a debit and you have a credit, right? And then there's ordinary shares issued, retained earnings, long-term borrowings, bank overdraft, trade payables, and then deferred tax. Okay, I'll just highlight that for the sake of highlighting it. And then you've got SARS, and then there's also profit before tax, land and cost. Okay, that's fine. And then building at carrying amount is owner occupied. Okay, plant and machinery at carrying cost, at carrying amount, and then they give you what the figure was for 2007. So that amount was at carrying amount in 2007 as well. So both 2008 as well as 2007 was at the carrying amount, right? Okay. Then they also give me the prepaid insurance. Okay, I don't know what's gonna be what for now. So I just know there is prepaid insurance, and then there's investment that is unlisted, and then trade receivables. Okay, so I'm done with the trial balance now. Now I'm gonna see what information now additional that's gonna impact now on the trial balance. Fine. Now they say, so depreciation and tax allowance on plant and machinery amounted to 96,000. and 108,000 respectively. Okay. So plant and machinery in the current year, we wrote a depreciation of 96,000, and then we receive a tax allowance of 108,000. Fine. So the profit before tax that is shown in the trial balance, and then very important, it already includes depreciation. So depreciation has already been taken into account for buildings as well as plant and machinery. Then you will see later in the question why this is important that I'm highlighting in here, right? But I'm going to tell you now what the reason that is. So the tax base of the plant and machinery at 31st December, okay, amounts to 818. And at 31st December 2007, it's 926. Okay, so in this question, I think most of the things is given to you, provided, given, provided, right? So I think you will see it's going to be a matter of copy and paste, right? But then it's very important for you to know as to what it is that you're actually dealing with. Okay, fine. So now we haven't answered the question as yet. Now we're just analyzing what the scenario is saying. I hope everyone is still with me. Can you guys see the question that I have in front of me? So the question that I have in front of me is question 4. That question comes from tab letter 102. Okay. Because I see a comment that someone is not able to see the question. So the question comes from tab letter 102, and it's question number 4. Now we're just reading the scenario for now. Okay, we haven't yet answered anything as yet. Okay, fine. Okay, point number 2, Aroma Limited depreciate its building at 50,000 per annum. That's important, okay? Whilst no tax allowance is allowed for tax purposes, okay? So we already know in the question that we are dealing with deferred tax, right? Fine. Now, what does this statement then create for you? Is building going to have deferred tax implications or not? Do we need to account for deferred tax implications on buildings, or is there no deferred tax implications applicable for buildings? Because of this question now, they're saying that Aroma Limited, you depreciate buildings at 50,000 per annum, right? However, SARS does not grant you any tax allowance on the building for tax purposes. Is there deferred tax implications, yes or no? Is there going to be any deferred tax implications, yes or no? Okay, that's correct. So we will not have any deferred tax implication in this regard. So we will treat this as a permanent difference. Now, if I speak about permanent differences, when you are asked to do a tax recon, do you expect to see this line item for depreciation under your tax rate recon as a permanent difference, yes or no? My question is, if you are asked to do a tax rate recon, do you expect to see, or will you include this line item for depreciation as a reconciling item, yes or no? Because remember, we've already said that there is no deferred tax implication on building, right? And then now we're saying that, okay, it is permanent differences. Do we expect that we're going to include this as a reconciling item in our tax rate recon, yes or no? And the answer is yes, because there's yes, that's correct, because there's a difference in terms of how tax treated versus how accounting is. So for tax, you receive no allowances, whereas for accounting purposes, then you've written off depreciation. So that depreciation we need to add back. Okay, but you will get there. So I'm glad that all of you are with me in terms of your yes and your no's, and that's a good indication. I like that. Okay, let's carry on. Fine. Now, point number 3, the company made the following allowances, the following allowance for credit losses, right? Okay. Now, on the 31st of December, the balance for credit loss was 40K, and then 31st of December 2008, the balance was 50K. Right? SARS only allows 25% of the allowance for credit losses, right? For tax purposes. Okay, meaning that now that in the current year, SARS is going to allow you to deduct 25%. The rest of the 75% you will deduct in future. Okay, fine. So from the balance of 2017 or 2007, SARS allows you to deduct what? The 25%, 75% deductible in future. That's very important because when you do this thing, you'll see to some extent it's confusing how it is. Fine. The same as in December, SARS allows you 25% to deduct in 2008, and then the rest of the 75%, the remainder, which is 75%, is now deducted in future. So the practicality of this situation is that SARS has now introduced, so in practice we call it a new Section 11J sort of allowance, right? Where now there's different rates that are now applicable. It's no longer 25. There's I think 60 and 40, but also now it looks in terms of whether you apply IFRS 9 and all those kind of things, right? So it's just with the rate, but I think in this case, for the purpose of this module, they will always give you what the rate is that they've allowed for credit losses. So you don't need to worry about that. It was just for those who are interested that there's a new Section 11J, and then it also introduces now new allowances rate or new allowances that one can deduct, depending on whether you apply IFRS 9 requirements or you don't apply IFRS 9 requirements. And then it also goes on further to make I don't want to say concession, but it's provisions for different industry, whether you're in financial services industry and then so forth. So it's just interesting to actually know about these things. Okay, so let's move on. Fine. So actual credit losses are written off directly to the income statement, to the statement of profit or loss and other comprehensive income, and not against allowances for credit loss. It's self-explanatory. Okay. The deferred tax balance on 1st of January 2008 arose as a result of taxable temporary differences on plant and machinery and the deductible temporary differences on the allowance for credit losses fund. So the reason why they're giving you this, and you're going to do a test, right? Fine. So if we go up to the question, and then we go to our trial balance. If you go to your trial balance and then you go to the line item that says deferred tax, right? You will see the balance there is 40,020, right? Fine. Now, when I read part 4, it tells me how is that 40,020 made up? How we got to 40,020, right? We got to 40,020 because of the taxable temporary differences on plant and machinery, as well as the deductible temporary differences of allowances for credit loss. So that amount of 40,020 is made up of 2 items, plant and machinery and your deductible temporary differences for allowance for credit losses. That's very important to know because we're going to do a test that we know that our opening balance in the beginning of the year was 40,020, but now we can also do a test to confirm whether this statement is actually true. And then we're going to do that together because I'm doing that with you so that the question, if it's asked in a different format rather than in this way, that you are not given what the opening balance is, you now need to do the opening balance yourself. That's fine. Okay. Number 5 says the long-term borrowing is a mortgage bond registered over land and buildings. Okay, the loan bears interest at a nominal rate of 18% per annum and is repayable in monthly installments of 8,321 each. I don't know what to do with that at this point in time because I'm still analyzing the information. But what's important is number 6, included in profit before tax are the following items. Okay, and then we can spot the favorite one, dividends received. We know dividends received are not taxable. Okay, section 1K of the Income Tax Act, and then fines paid. Section 23, 23 of the Income Tax has certain prohibitions that there is certain expenses that are not deductible. So we already know by now that this, for tax purposes, is not deductible. But we know accounting has already included that in the profit before tax. Okay. And then you also have an increase in credit losses, and we're going to see now what impact that has on our deferred tax or tax calculation. Okay, let's get it on. Right. Okay, and number 7 says provision should still be made for current tax and deferred tax. So we still need to provide for tax and deferred tax that has not yet been done. So that is what the required now in your question is going to ask you to do, right? But very important, it says that the tax rate was 29% for the year ended 31st December 2007, and then 28% for the current year. Fine. So if you're looking at this state, if you're looking at this, if you're looking at point number 7, especially with the reduction of the tax rate, we will need to consider this when we do a calculation of our deferred tax calculation. Yes or no? So when you're doing our deferred tax calc, do we need to consider any implication of tax rate changes? Yes or no? Okay, that's the first part. The second part is, yes, I agree with you, okay, that's correct. Yes, that's correct. Now, the second part of the question is, if you were asked, right, to perform a tax rate recon, would you include a tax rate change in your tax rate recon? Yes or no? Okay. Would you include? Yes, you would include. Okay. So your responses to me indicates to me that you guys understand your work. You guys know what it is that you're doing as far as the module is concerned, and I like that. Fine. Now, this rate change, what does it do to your tax? Does it increase your tax or does it decrease your tax? The change in tax rate, will it increase your tax? Without even looking at the numbers now, will this increase your tax or will it decrease the tax? Just by looking at the rates, you should be able to give me an answer. Will this result in a decrease in tax or will it result in an increase? That's correct, Portia. It will result in a decrease in your tax. We're just looking at it now from a naked eye now, just like that. Okay, fine. That's correct, DG Fisher. It's gonna decrease. Fine. Now, number 8 is very important. Deferred tax is provided for on all temporary differences using the statement of financial position approach. I've showed you last week as to how does the statement of financial position approach look like, right? Even the required as well is going to emphasize that you need to use that approach or that method. Okay. Now let's go to the required quickly to analyze the required. Okay. The nice thing about analyzing a scenario and then analyzing your required, you will understand that when you're done with your required, you're done with your skeletons. When you answer the question, you go directly in terms of what it is that you need to answer. You're not going to waste time trying to figure out as to, okay, what needs to be done here? No. You've done proper planning. You know what's what in the scenario. You know where to find what. You know what it is that you need to direct to address as you're required. Fine. Required A says, and I've highlighted, calculate, right? And then prepare a journal entry for the deferred tax movement. Very important, right? It says deferred tax movement, right? So in my answer, when I am done with the calculation of the deferred tax, I need to be able to show what the movement is, because that's what they've asked. Okay, so I'm going to share now my template with you, how a template for required A would have looked like, right? But what's also important, so it says here, including the rate adjustment. They don't need to tell you. You should know that if there's a rate change and then you're doing your deferred tax movement, you need to consider the rate change adjustment implications. They don't need to tell you. Okay, in the statement of profit or loss and other comprehensive income. So in the statement of profit or loss and other comprehensive income of Aroma Limited for the year ended. Now I'm going to share with you, if I was sitting in an exam and answering this question, what would be the first thing that I would do without even answering the question? Okay, I will unshare the screen and then share the template with you. Okay, where is it? Is it this one or which one? Okay, so in front of you, you should be able to see a blank template here that says, so the tab will say DT movement. That stands for deferred tax movement. Okay, and then you will see there's also a journal that's there, right? Just delete that quickly. We'll do all this together. Okay, fine. So you guys can see the template in front of you, right? Okay, fine. Let's go and do. So if I was answering this question, this would have been my template. This would have been my template, right? Okay. Yeah, this would have been my template, but now what's going to happen here is that in the 31st of December 2017, there would not have been a need for me to include all of these items because they've already given me the balance, right? And what is the opening balance or what is the closing balance for deferred tax, either on the 31st of December 2007 or the 1st of January 2008? What is the balance, either closing balance or the opening balance, 1st of January 2008? What would be that balance? Give me the opening balance for deferred tax, whether it's a liability, whether it's an asset, for the 1st of Jan 2008. So Amelia, that's correct, is 40,020. Right, fine. But remember what I said to you is that what we're going to do, we're also going to try and test that the statement that is contained, let me just share that with you. The statement that is contained in point number, let me just go back quickly to see. I think it's point number 4, whether that statement is true, to say that 40,020 is made up of taxable temporary differences on plant and machinery, as well as the deductible temporary differences on the allowance for credit losses, right? So we're going to go and test that one if that is the case. Okay, I'm just having a bit of issues again here, but I'm gonna put up the screen just now quickly. Sorry for that. Okay, my Excel doesn't want to work now. Okay, just hold on for me quickly. Just see if I can open that. Just want to see quickly. My Excel is blank now. Okay, this is not helping at all. Okay, let me just unshare quickly and then I'll share it again quickly. Just close. Close. Okay. So close this. Not sure why is it doing this now. So close that. I think we'll have a problem with this thing now, but let's try quickly. Not sure why is it doing that. Okay, it's trying to open. Let's see if it's open. Okay, it's open now. Okay. Otherwise, it will defeat our purpose if we're not. Okay, we're back again. Hopefully, it's not gonna do the same thing again. Okay. So what I was trying to say, what I was saying earlier on is that we will need to prove that that 40,000 that they give us, right? It's that 40,000 that they give us is then made up all of those items that they say in that question, right? Okay. Now, please read in your individual questions, okay? Now, required 2 says you need to calculate the current tax expense, right, in the statement of profit or loss and other comprehensive income of Aroma Limited for the year ended 31st December 2008. So the movement in temporary differences in the current tax calculation should be calculated using the statement of financial position approach. We've already emphasized that, right? Now, if I go to the answer sheet, now if I were you, my template would have looked like this. Okay, I would have just draft a skeleton because I know how the skeleton looks like, right? But I'm gonna do it with you, not to worry. I will do it with you from start up until the end, right? Because you're gonna remember it much easier when I'm doing it with you. Okay. Now back to your question again. Required C says you need to prepare a note, and it's a very quick one, right? In respect of the deferred tax liability or asset in the annual financial statements of Aroma Limited for the year ended 31st December 2008. Your answer must comply with IFRS requirements. Now we're going to answer the question, so you must pay attention, right? Okay. But now let me just show you the note, how the note would have looked like. So the note would have looked like this. That was your note. So it's just a skeleton. So you are telling the marker that I am preparing now the financial statements for Aroma Limited. These are the notes that they require, or this is the note that they require for this current year, right? And then now this note relates to the deferred tax, and then now we're going to analyze what the temporary differences are made up of. Okay, fine. Now, I'll just do that quickly. I think I have a problem here, but you guys just need to be patient, unfortunately. Okay. Now I want to start answering the question now, but my Excel is not giving me joy in this regard. So unfortunately, the reason why I have these issues is because I don't have the full access of my account for Teams. So this is the reason why I have these issues. But hopefully by next week it will be resolved by the guys. Okay, anyway, fine. Anyway, I think let's continue up until a point whereby we are unable to do so. So for now, I think we're still able to. Right? That's not what I want to share with you. Okay, this is what I want to share with you. Fine. Now, okay. So if you go to the question, right? So now how I will deal with the question is I'm going to address the question point by point, because once I'm done with point 1, I don't want to ever go back to point 1 again. Now, from your question, if you go to a trial balance, right? The first item that you can use in there is your deferred tax liability, because your deferred tax liability, they give you what the balance is, right? The balance is 40,020. But let's ignore, for the purpose of the session, let's ignore that part for now, right? But we know that whatever that you do when you're doing the calculations, we know that the deferred tax for 31st of December 2007 is going to be 40,020. Fine. Now, let's go to land. Land, okay? So we've got land, and then land cost me how much? Land cost me 310,000. Okay, fine. Now, will we have deferred tax? So what is the tax base of the land? Or let me rather ask this. Are we going to account for any deferred tax implication for land? Are there deferred tax implications that we need to account for land? Yes or no? Is there deferred tax implications that we need to account for land? Yes or no? Are there any deferred tax implications that we're going to account for land? Yes or no? That's correct. So we're not going to account for any deferred tax implication for land. Okay? And then the reason that will be that there is no SARS does not grant any wear and tear allowance on land. Okay? So that will be the sole purpose or the reason why there won't be any deferred tax implications. Okay, fine. So it's obviously exempt. So fine. So we've won the first one. Fine. Now, the second part in the question that we have buildings. Just under land, we have buildings, right? Now, for 2018, or sorry, for 2008, right? Land has building has already been expressed or given in terms of the carrying amount, right? But now what we'll find out is that now for the 27 financial year, it has not been given, we have not been given the carrying amount, but that's not going to impact us on our calculation. Okay. So the same thing that happens to land, buildings will also be exempt. Why is building exempt as far as the deferred tax is concerned? Why do we say that deferred tax is exempt as far as deferred tax is concerned? If you go to point number two in the question tells you that depreciation for building was 50,000 per annum. However, there were no tax allowance on the building that were allowed or that are allowed for tax purposes. That is the reason why it's exempt. SARS does not provide any deferred tax, so it's zero. So it's zero to cost. There is no allowances that were granted, so that portion will be exempt. If it was an FAC3702, then I would have went further speaking about now. If you have anything that's above the cost, then what are the implications, right? But for this module, I'll just leave it at that level. Fine. Okay. Now, let's move to the next item in the question. So in the next item in the question, you've got plant and machinery. So plant and machinery, okay? What is the carrying amount of the plant and machinery is given as 1,094, right? Okay, and then what is the tax base of plant and machinery in 2007? It's given as 926,926. Okay. So do we have, so our temporary difference now is 168,000. Are we still together? Yes, we're still together. Now, do we have an asset or do we have a liability in this regard? Is there an asset or is there a liability in this regard? Got a liability. Fine. Now, what we can do as well is we can also, that's correct, Amelia, it's a liability. Right. Now, the question is already given us as to what is the carrying amount of the plant and machinery in 2008, right? It's 998. Right? What is the tax base in 2008? The tax base would have been 818. Everything is given. So this question was easy because everything was provided for you, right? That's fine. Now, so we have a liability. Okay, fine. Now we move on to the next. We move on to the next part now. Now, in the question, we see that there is prepaid insurance, right? But now this prepaid insurance, it only impacts on 2008, right? Say prepaid insurance, it only impacts on 2008. Fine. There's nothing for 2007. There is nothing for 2007. It was only in 2008. Fine. If I may ask you, the prepaid insurance in a trial balance, is that a balance sheet account or is that an income statement account? Prepaid insurance, is that a balance sheet account or is it an income statement account? And 25, so, and then 25,000. Okay, it's fine. So is that a balance sheet account or is it an income statement account? Balance sheet account. That's very important because that's correct. Ellen is correct. That's balance sheet account. So balance sheet account have credit balances, right? Okay, that's very important to know because if you mess up the signs here, then it means that your balance at the end of 2008 is going to be incorrect, and then subsequently your movement in deferred tax is going to be incorrect, right? So that's very important. Fine. Now let's move on to the next item. Now, so we've done with number one, we've done with point number two, we're now going to point number three, right? Point number three deals with the credit losses, right? Fine. Now, what you need to pay attention to here, I'm going to use only one method that I prefer, but in the solution, there is two methods that is preferred, but I prefer using this method that I'm going to use now, because for me, it makes more sense for me, right? So you can use either method, because in any way, you will get to the same answer, but now the method that I'm going to use, to me, it makes more sense. Remember what I said to you? Was that SARS says they can only allow you 25% as a deduction, and then the rest of the amount will be deducted in future, right? Credit losses, okay? In 27 credit losses, we had a balance of 40,000, okay? Just gonna do this. And then in 2008, it was 50K. Right. Now, what is the tax base in 2007? What is the tax base in 2008? Remember, SARS says, I can only give you, I want to take my calculator quickly. SARS says, I can only give you 25% of what is reflected in your books, right? Okay. How did I get to 10,000? I said the carrying amount in the accounting records, which is in the financial statements or trial balance or additional information, is 40,000. SARS can only give me how much? SARS can only give me 25%. What was happening here? There needs to be negative. So the remainder of this, I will deduct in future. Okay. Are we all together? Okay, fine. So we're going to apply the same principle for 2008. Right? I am going with you in this step by step because there's marks that are lying in here that you can actually get. Fine. Now the same thing that is going to happen. SARS says, okay, fine. Now the carrying amount in the financial statement is 50,000. Say minus 50,000 because this is a balance sheet account. SARS was only able to give me 25%. Fine. There you go. Fine. Now go through the question again. So we've done the point number 3, right? Now go through the questions, and then we have point number 4, number 5, number 6. You will see that in point 4, 5, and 6, there's nothing that impacts now more on this calculation that we do. But what I said that we want to test, they said in point number, go to point number 4, they said the deferred tax balance on 1st of Jan 2008 arose because of the following: plant and machinery and allowance for credit loss. Now, I want to prove to actually say that is the case. So at the end of or beginning of 1st of Jan 2008, I want to actually see in my calc that the balance is 40,020. Now I'm going to go to my calc. I want to see whether the answer is actually a liability of 40,020. So what is the answer in the calc that we have now? 40,020 as the liability. So now I can actually say that the statement in the scenario is correct. But remember, you were not required to do this. I just did this just to show you how you actually get to that liability. So if you were in an exam situation answering that question, I would only expect that you would have balance, whatever, and then negative 40 or 20. That's the only thing that I expected you to do. You did not have to do what I did, but I was just showing you how you actually got to 40,020 liability. Right. Okay. So we are all still together. Fine. Now, remember the question said, including the tax rate adjustment. Okay. Now, remember we said when we're analyzing the question that it's going to be a reduction in tax. Now, so this amount, it will now need to be reduced by something. I don't know how much do we need to reduce that with. How much do we need to reduce this liability with going forward? We were at 29%, all right? But now, going forward in future, we need to be at 28%. What is the rate reduction? What is the rate reduction? I'm not looking for the deferred tax of the rate reduction. I'm looking for the percentage rate reduction. How much is that going to be? I'm going to give you 5 seconds to give me that answer. What is the rate reduction that we need to use to reduce the balance of the deferred tax on the 1st of January 2008? So all of you are correct. It is 1%. So all of you are correct, and I like the fact that you are correct. Fine. Now, so what we need to do is we need to reach. So we know our balance is 4020, right? Okay, it's 4020. Now we need to reduce that 4020 by 1%. Okay, so 1%. Remember, 4020 was at 29%, right? So we need to reduce it by 29. So your rate reduction, your reduction as a result of the change in tax rate is going to be a positive or an asset of 1,330, right? Okay, so remember we've got 2008 now, we've got 2007 as well, and then we've got our rate reduction. Okay, but remember, we have not answered the question. The question said we need to calculate the deferred tax movement, as well as we need as well as take into account or take into consideration the impact of the rate, the impact of the tax rate change, right? So that was the requirement. So to this point, we have not yet answered the required. The required asked us to do what? To do the deferred tax movement. Fine. Now, the easier way of doing this is I know what my balance was at the beginning or the end of 2007 or beginning of January 2008. It was minus 425. And I also know what my balance is at the end of 2008, December 31st. It was that amount. Fine. Now, the challenge that most of you will have is, okay, so I think this, in this case is, I would say, I don't want to say easy. Just want to see if we did include for all the items here. So we have that, we have plant and machinery, we have that. So we have plant and machinery, we have credit losses, we have prepaid insurances. Okay, so everything is here. Okay, so I think we're sorted with all of the items. Okay, now what I'll do is, what is this now? Okay. Okay, that's 25,000, that's fine. Just want to see when was the prepaid insurance. Okay, the prepaid insurance, okay, is right. It was in 2008. There's a plant machinery, and then you've got your trade receivables, okay? Just want to go to, okay, my Excel is frozen now. Forgive me quickly. Okay. Sorry about that. Fortunately, that's the only way. I'm just gonna open the Excel again just now. Sorry guys, it's freezing and there's nothing I can do about it. Okay. Okay, it's open again. Let me share quickly. I'm just trying to do a spot check quickly to see whether we've included everything and okay, I'm just waiting for my PC to because everything is now freezing. I'm not sure what's going on. Okay, just want to see if we've included everything here. Okay, okay, I kind of made a mistake there. That part. Sorry guys, okay. I have serious issues with my Excel, unfortunately. Let's try one more time. If it doesn't work, we need to find an alternative way of how we can do it. Okay. I'll reopen again, then we'll see. I'm just gonna share my screen with you again. Share my screen with you again. Okay, there we go now, so that's fine. That's right. Okay, so that's the balance of 40. So the balance in 2008 was minus 46,900, right? Okay. Now your movement is, so you started with 40,020, right? And then there was a deferred tax in between, right? And then now, sorry, there was a rate change in between, right? Now you ending up with 46,900, right? Now, what is the movement? So you started with a negative that, and you ended up with a negative that. Right? Okay, so that will be your movement. Okay. The movement will be, I've started with that. There was a rate reduction and there was now a liability as well. So your liability grew by that amount, 8260. So that's what happened to your liability. It grew. Okay. Now, how do you then, because remember, you're going to need in terms of what is your temporary difference. How do you get your temporary differences? Right? Because remember now, this figure now is sitting at 28%, because remember, going forward, everything must be sitting at 28%, right? So what you basically do is you will take that and then you work back and say you need to divide by 0.28, and then you should get to an answer of 29,500 rand. So that should be your answer. But now remember, we have not answered what the required is, right? And then remember, the required said you must do the movement, and then in the movement you need to do with your journal entry. So the journal entry that you would have passed, if deferred tax in your profit, because we know it's a liability in our profit and loss statement, and then you have your deferred tax in your SFP or statement of financial position. You can just duplicate if you want, and don't have to. Okay, that is your fine. And then the amount is fine. Now we need to be careful now here. Okay, so my opening balance was how much? Okay, let's start with the closing balance in 2008. The balance in 2008 is 46,900, right? We now want to show what will go into our income statement, right? We know we had an opening of 40,020. So that then will be the amount that is going to go into our financial statements, profit or loss statement, right? So that is the amount that will go in there. Okay, so I'm going to show you now where that rate adjustment would have fit in, right? Okay, but just a question, are we all fine up until now before I move into the next required? Are we all still on par with what we've done thus far? Or is there anyone with a specific question that only relates to what we've done thus far? Okay, let's continue. Now, the second required was, if I remember correctly, I don't have the question now, it was you need to do the current tax, right? The nice thing about this now is the fact that you now have everything that you actually need here. You've got your movements, you've got your rate adjustment, you've now calculated everything. So it's a matter of, this is also part of a good exam technique. The matter of now copying and paste what you have. Fine. So your current tax, we know it's standard. Profit before tax was given. Go to the question. Profit before tax was given. How much was that? Why am I using this amount now? It's a mistake. Where is profit before tax now? Where is profit? Okay, no, I am right actually. So sorry, Karen, I am right. So your profit before tax is 4,555,000. That's standard, right? Now, we have items that we need to adjust for. So we call it exempt items. They are either non-taxable or they are non-deductible. The first that I can see, if you go into your question, under point 6, there is dividends received. Dividends received, section 10(1) of the Income Tax Act, received, they are not taxable. So you're going to say these dividends are not taxable, right? Now let me show you a trick. Oh, okay, that trick won't work now, or it will work, but it was not part of the requirement, right? Now let me show you a trick. If you were now asked to do let's do roughly here quickly, say tax rate record. This was not part of the required, but we're just doing it roughly now. So we would say profit before tax, right? Okay, so we have a profit before tax as that amount. That is our profit before tax. And then you're going to say at standard rate, you know, standard rate is going to be, say, that multiplied by 0.28%. Okay, I'm just showing you this now in case of if now you were also asked to do the tax rate recon, but this was not the requirement, but I'm just showing a good example technique. How do you take one amount, plot across all sections, right? And then we said the exempt differences, exempt differences. I'm not going to write it in full for the purpose of this section. Okay, we have dividends already, you know, right? Dividends received. Okay, then we can go there and say dividends is equal to less dividends received. Dividends received 30,000 multiplied by 0.28%. You try now to take one amount and then apply it across where it's applicable. Fine. Now, over and above dividend received, remember, we also had fines that were paid. Right? So fines paid. Okay. How much is fines paid? It's why can't I see now? Is it 2,000 or is it 110? Is it? I think it's 2,000. So fines paid, it's 2,000. So there are, you can't, for tax purposes, you can't deduct. So these will be taxable. Right? So fines paid, then you go to a tax recon and say fines paid. Okay, we know that it is non-deductible. Okay, so we said fines paid at 28% because that's what we do our recon on, 8%. Okay, and then the next one is, what is the next item that we are missing? I want you to give me that. There is one item that is still missing here. What is that item? What is that line item? I've given you the clue. What is that? What is that line item? What is that line item? Portia, Zetu, Ellen, Amelia, give the answer. Dishi, Fisher, give the answer. What is that one item that you're missing? Okay, remember we said buildings had no wear and tear that FAS gave us, right? And then we said that will impact us because this might be a reconciling item. So depreciation on buildings. Because this will never be a temporary difference. That's correct, Portia. This will never be a temporary difference because there is no wear and tear allowance that's granted on this. Fine. It was 50,000, right? If I remember correctly, 50,000. Okay. So we add back, right? Why is it not? Okay, that's fine. Okay. So then that 50,000 you say depreciation. And you say it is equal to, was the amount 50,000? I'll just double check now in this scenario and say multiply by 0.28,000. Okay, fine. Now, so we've included all the items now. Now, there is still one thing. So we have now taxable income before temporary differences. So now we need to include our temporary differences because remember, we've already, so the movement in temporary differences, we've already calculated what the movement in temporary difference is, right? We've already done what the movement in temporary differences is. Movement, temporary differences was 29,500 ash. What's happening now? What's happening now here? Okay, what's wrong? Okay. This is okay, it's frozen again. Give me a second quickly. What's wrong now? Okay, give me a second quickly. I'll be with you just now. Okay, I'm gonna share my screen with you again just now. Okay, Excel not responding. Okay, we'll get there just now. Just be patient. Okay. Okay, in the meantime, while I'm still busy trying to put this up, just give me what is the amount of taxable income going to be. Give me what the amount of the taxable income is going to be. Give me the amount of the taxable income. What is going to be our taxable income for the year? Okay, so our taxable income for the year is going to be 488. So there is our temporary difference we've incorporated in there. And then our taxable income is going to be 448,000. 448,000, sorry. Then our current tax with that is going to be 125,000, right? Now, and then obviously now, if you were trying to complete now your complete tax rate recon, you would have then said tax rate change or adjustment, and then you would have shown a reduction in tax of 1380. Right? So remember, you are now done with your current tax expense. There's nothing more that you need to do. You're done with that. Right? But what I'm showing you is that if you now needed to complete your tax rate recon, what other items would you actually consider in here? So we've done dividends, we've done fines, we've done depreciation, we've done the rate change. All right. So, and these are easy marks that you can actually get because you are transferring whatever that you have done here already, as well as here already, then you're transferring into your tax rate record. These are easy marks that you can get, right? So that is how your tax rate record would have been. But this was not part of the required. Obviously, remember on top you would have had your income tax expense note. What is your current tax expense? Your rate, your rate adjustment, and all those kind of things, right? Right. Now the last part of the required is, let me go to the question quickly. The last part of the required is, you will need, which is C, you will need to prepare the note in respect of the deferred tax liability or asset, right, in the annual financial statements, right, of Aroma Limited. So this is what you will use. So that will be your note, Aroma Limited, and then the notes to the, so notes for the year ended 31st December, deferred tax, and an analysis of temporary differences. So we know, just a reminder quickly, if you can complete for me the attendance register, as well as the feedback form before the end of the session, I'll appreciate that. Okay, fine. So the first line item that we had our plant and machinery, right? So we say plant and machinery, so we can say accelerated wear and tear, accelerated wear and tear, we can say depreciation, whatever we call it, wear and tear, for tax purposes. Okay. And then that was, you copy directly as it is, that's 50,400. And then the next one was, so the next one that we had was your credit losses. So credit losses. Okay, I think we had an asset there. So the asset there was how much? Can we just go back there quickly? The asset there was that. And then we also had prepaid insurance, prepaid insurance. Prepaid insurance was a liability of how much? Of 7,000. Now, at the end of the day, once you're done with this note, your note, this amount that you have here should agree with this year. Because remember, this is not a disclosure. This is a calculation, right? This is a disclosure note to say how deferred tax is made up. This, when they say to you, do a deferred tax note, this is what they're asking you. A deferred tax liability or asset note, this is what they're asking you. This is not a deferred tax note. This is a calculation. So when they're asking you to do a deferred tax note, I am expecting you to see this. So all those amounts, you're going to carry them from here. You're going to carry them from here to here. Otherwise, if they say to you, do a deferred tax note and the time runs out, you are unable to answer this, you only give them this, you will get no marks because you did not address what required C asked you to do. Required C asked you to do a deferred tax liability or asset note. That note would look like something like this is what it would look like. Okay. Are there any questions that you want to ask in respect of current tax calculation, in respect of this deferred tax note? Is there any questions you would like to ask? If not, please do me a favor, just please complete the attendance register for me, and then as well as please complete the evaluation form for me. Yeah, I think perhaps what I forgot to do here was to say whether this is an asset or liability. Okay, sorry. Okay, that's it. Yeah, and I think that was about it. So this was a very straightforward, quick question, but with very important principles that that one needs to understand. Okay, so just to explain something quickly. So with your credit losses that SARS gives you, the impact that will have in your, I'm just trying to go back now because I think I forgot to explain this. So whatever allowance that SARS grants you, let's say in this year, they would have allowed you to deduct, in 2007, they would have allowed you to deduct 10,000 Rand, right? As an allowance, fine. Now, in 2018, you have a new balance now of 50,000. So what they will do is that they will say it's fine. So in the new balance will allow you to deduct 12,500 Rand. But now whatever that was deducted in the previous year as an allowance, you will now have to add back in your tax calculation. Okay. So I think that's also it's also important. No, but now this question here they've asked us to do using the financial statement position approach, which is our movement. We had to do it using our financial statement position approach. Okay. And I just want to see what else I want to explain quickly. I think that's about it. But is everyone clear on the current tax expense? No questions, right? Okay, if there are no questions, then I think we're going to conclude for the session of today. And then I'm going to see you guys again next week, Tuesday. Yeah. So if you would like to listen again to the recording of the session, it will be made available in the next, I think, 72 hours for you to watch it, listen to it again, and then all stuff. Right? If you would like me to, if you would like to have the spreadsheet, I'm gonna load it up onto Teams. Then you can access it from there. But what I can say to you is the solutions in here is it's exactly the same, or it should be the same as what is contained into your study guide. But I've just redone them. I've just redone them from scratch so that you are able to follow in terms of how a certain amount made up of. All right? Yeah. So the session for last week is available. It should be available. I didn't watch it, but it should be available, right? So you will find them in the same link. So the same way that you try and access the link for today, it should be in the same links as well. So it should be available because it only takes us 72 hours to actually issue out this recording. Yeah. So if you can do me a favor again, please complete the attendance register, and then as well, please complete the, yeah. So Temagazi is saying that it is available. So there too you can go and check. Yeah, so it's a couple of guys have already seen it. So there too you can go and check under those links for the recordings, and then you should be able to find it. So thank you guys for your participation in the session. I really appreciate it. It also gives me an indication in terms of where you are, and I can say you are on the right track. Just keep practicing, make time for the module, and then I promise you, you should be able to do well uh, in the module. So Ellen, Zetu, Amelia, Dishi Fisher, Temakasi, we'll see each other again next time. And then I think that's about it. And then have a great one. Cheers, guys.